All right, welcome back, guys. Today I am super excited to have Don Hennick from AccrueMe. He's going to give us the lowdown on a case study, how to scale an Amazon business from 144K to $1 million. We're going to go deep into cash flow, capital, financing, and even some funding options you guys may not have considered. Welcome, Don. How's it going today?
It's going great, Gary. I'm really happy to be here. I'm excited because we're going to go into some things today that I have not talked to other people about ever. Some key
Yes.
concepts in finance that people don't even know about. So I think we're going to find that a lot of the things we're going to talk about today will not only apply to the Amazon businesses, but any other businesses that our viewers watch have started, and as well as their personal life. So I'm excited about that.
Perfect. And because we are live, if you can see and hear us, if you can type your name and where you're joining us from, that would be great. So I'd like to quickly introduce Don as we're beginning today. Don has, he's been a lifelong entrepreneur, and he just shared with me, he started out, he's built, he's scaled many businesses through his business lifetime, and he brings a world of knowledge coming from the time when he was the number one salesman as an 11-year-old when he was just a kid on Long Island, to helping today he's helping Amazon sellers scale their businesses quickly. And then he actually came out of retirement to start up AccrueMe, and he's helped hundreds of Amazon sellers with scaling their businesses and funding. So he's going to share a lot of from what's working today in today's presentation. So Don, can you give us a quick preview? Who is this for, and why should people join? Why should people watch today?
So it's really for Amazon sellers, flat out. Any business would benefit from this. Truthfully, I'm gonna show you guys how we're turning finance on its head, how you're going to be able to take some of the things that you thought were impossible to change, because they've been done the same way for 2,000 years. And we're going to show you ways that you could turn it around and put it in your favor. I can tell you flat out that every financial contract ever done is not in your favor. It's always in the lender's favor, the finance company's favor, whatever it may be. It's the way it is. We all accept it. We flipped it around, and we're going to show you how to accept that, and then how to grow rapidly. If that's what your goal is, you're going to be able to grow rapidly. So what ends up happening, Gary, is that people that go through this, one of the things that they learn pretty quickly is that they end up with the money that they need, more money every month. They can keep growing and growing and growing. But what they realize is they have to learn to work harder, because you have the opportunity now to really grow. Means you have to find the products, you have to launch new products, you have to learn more about the Amazon world, and really dig in and make it a career, and then get that big exit. That's what it's really all about, and then do it again.
Yes. So I feel like, scaling your business, it's kind of like adding fuel to the fire, right? I mean, you got to get started, you got to pick the right product, you got to get some traction first. And then, once the machine is working, you just got to keep pumping more and more fuel to get that engine growing. So today, Don's going to share some of the real strategies that are working, as well as some funding options to help you guys. So I'd like to quickly welcome some of our attendees. Welcome. I think it's Rogerio de Andrade. Good evening. Reedy, welcome. Gina, welcome. Andrej from Thailand. Wow, it's early for you, 7 a.m. Welcome. Managed by Stats, our friends over there. Great to see you. And welcome Adam from Las Vegas, and Reedy's joining us from India. So we have a worldwide audience today.
Beautiful.
Excellent. And thank you for all of your pre-registrations and submissions, guys. We had over 200 registrations. We won't be able to cover all of the questions, but we did share the questions with Don, so he's going to try to incorporate and answer as many as we can, and then we will have time for Q&A. If you have any questions, feel free to drop them in the chat. We'll address them at the end. All right. And I know that some of you guys had questions about PPC. I know PPC is one of the levers you can pull as you scale your business, but Don is not a master at PPC. He's a master
No.
when it comes to capital funding and finance. So with PPC, we will save those questions for a future webinar. And I have definitely made a note of that we will definitely have a webinar to help you guys with PPC. So just to set that straight. All right.
Yeah.
And also welcome to Chinedu, our friend Chinedu from Miami. So great to see you. All right, Don. So without further ado, let's get into this.
All right.
All right.
Let me share my screen, Gary. Give me half a second and we're going to get this baby done.
Yes.
There we go. All right. Can you see my screen, Gary?
Yes, looks great.
All right. Well, that's a good start. All right. So let's dig right in. You know, it was a nice introduction. I appreciate it. It's going to be a lot of fun. We're going to have some, you know, I think you're going to learn a lot of things, not just about your Amazon business, and you could be anywhere in the world, but you're going to learn about business in general. It doesn't really matter what it is. You can grow rapidly if you have the right tools to do it and you have the right mindset. And I'm going to show you some things that I've used in my career on building many different businesses, starting many different businesses, and selling many businesses. And also I bought many businesses as well. So let's dig in. All right. So what's the biggest mistake that I find that people make is that they confuse capital, growth capital, with a loan. So is growth capital just going out and borrowing money? It's not. They're two different things, and I'm going to explain it to you. So first, let me ask you, and this is a great question. And I'm not asking you to type it into the chat or anything, but what do you consider the most important factor when you're financing your business? What's the most important factor? Most people would say interest rate. It's not the interest rate. I think you'd probably find that surprising. You would think, well, you know, 17% interest rate versus a 9% interest rate, that's got to be pretty important. What about term? It's not even term, but term is really important. If you think about it, let's use a mortgage as an example. You go out and you get a $500,000 mortgage, and you are able to get that mortgage for 30 years. Your monthly payment is just a little bit over $2,000 a month. You can handle it, no problem. But what if it was a 10-month term? Your monthly payment would be $50,000 a month. That's difficult. That's not easy. So term is very important, much more important than interest rate. The most important factor in getting in financing your company and your growth is payment. And term, yes, has a lot to do with it. Interest rate has very little to do with it. So term is very important, but the payment. So just think about it. Could you grow if you had that $50,000 a month payment? Chances are no. Could you grow if you had a payment of, $200? Chances are yes. So the lower your payment, the better. That's how you use more money for growth, and you pay it when it's right for you. That's the theory behind everything. So, I'm going to tell you some things that I used in my career. So Stephen Covey, for those of you who know him, he wrote a very, very famous book, The Seven Habits of Highly Effective People. Almost forgot it. And one of the things he said is begin with the end in mind. So think about it. When you're thinking about your Amazon business and growth, what are you thinking about? Are you thinking about, I want to take my business from $100,000 to $200,000 in revenue in 3 years? Is that what the end goal is? Or is the end goal, I'm going to take it, and again, just as an example, from $100,000 to $2 million in 3 years or 4 years? That's a pretty big difference, but having that different end goal in mind will change the way that you look at your business and change the way that you think about your business and change the way that you operate your business. What kind of systems are you going to apply? What kind of coaching do you need to get there? What kind of people do you need around you? What kind of a team do you need? So begin with the end in mind. Norman Vincent Peale, he wrote The Power of Positive Thinking. And, I'm one of those very, very positive people. Since I was a little kid, I was always extremely positive. Some people thought it was conceited because I believed I could do anything. And I still believe I could do anything. So Norman Vincent Peale said, shoot for the moon, because even if you miss, you'll land among the stars. And I didn't know that saying when I started my first businesses, but that was my theory. That was my belief that I wanted to have the biggest goal. When I started my mortgage company, I wanted to be the biggest in New York State. I ended up, when I sold it, I was the third largest. Just to put it in perspective, it was pretty large. Um, but begin with the end in mind and shoot for the moon. In my entire career, I've never met my goals. Never met my goals because my goals are out here. They're so far out. And then I build those companies, and every single time I've done it, I've gotten the company to here. And what do? I move the goals. I don't want to hit that goal. That's not when you get three-quarters of the way there, it's not a big goal anymore. So I end up changing that goal from something that when I started that was huge to then I'll get close to it. So it's not that huge. And then I make it huge again. And I'm thinking of this big goal and how am I going to get there? So shoot for the moon. Even if you miss, you'll land among the stars. It's a great way to grow any business, and it'll drive you. I'm going to give you a couple other things on this as well. All right, so Elon Musk, right? We'll build a spaceship to go to Mars. Like, who thinks like this? It's crazy. It reminds me of the guy who said, "Hey, I'm going to build a spaceship and go to the sun." And his friend looks at him and goes, "What are you, crazy? The sun is on fire. It's so hot, you'll burn up." And his friend says to him, "I figured it out. I'm going to go at night." So got to have a little fun too. But
Yeah.
Elon Musk, I mean, go ahead, Gary. I'm sorry.
No, that was a good one. Yeah. Good stuff.
All right. Hey, if you ever feel like laughing, you can interrupt me on that anytime. So yeah, Elon Musk, he's going to build a spaceship to Mars. I mean, like, how crazy is that? It's unbelievable. But then he built the stepping stones to get there. He didn't come up with a plan to build a spaceship, which is unbelievable in itself, and have it go up 600 feet and then come crashing down and just blow up on the landing pad, and then do it again, and you want to get it up 1,000 feet and have it crash down and burn to pieces. No, he built a spaceship to go around the world and out into space, and then come back and land on the same landing pad, or a different one if he chose, that he took off from, and reuse those rockets. Like, what? These thoughts never entered people's minds until he decided, that's how I'm going to get there. Could he have gotten there if he had a smaller goal? If his goal was to go up 1,000 feet and crash, would he have ever even attempted to build a spaceship that would come back and land on the same landing pad? Not a chance. So set those goals really far out. And does anybody doubt that he's going to do it? No. And again, imagine if his goal was smaller. The whole world would be missing a lot. It's going to be fun to see what he does with Twitter. That's for sure. All right, let's keep moving on. So what's the vision for your company? Do you plan to double in size in 3 years, which is not a bad plan, right? I mean, that's pretty rapid growth for most people. Or do you plan to 10x your business in 18 months? What happens if you might be sitting there saying, this guy's crazy, 10x my business in 18 months? You know what? You're right. Maybe that's too big of a goal. Maybe you should make it 6 months and see what you can come up with. But I can guarantee you this, if you think in the terms of 10x, how can I 10x my business? How can I 10x my sales? How can I 10x anything in a relatively short period of time? You cannot do it with the same skills and the same tools as you can double in size in 3 years. You have to think differently. You need new systems in place. If I'm going to 10x my business, that means I need to automate this, this, and this. How the hell am I going to do that? We'll make the plan and then figure out how to do it. Hire the people that know how to do it. Hire the companies that know how to do it. Bring them in and 10x your business. Shoot for it. Shoot for Mars. Shoot for the stars. Just keep going as big as you can and grow your business.
Don, I think this is a great point. And if I may, I'd like to ask everyone joining us. I know we have dozens of people on the call right now. Why not make this interactive? So think about maybe just take 1 minute. What is the vision for your company? What is the goal for your company? Remember what Don said, and Elon Musk said, we're going to build a spaceship to go to Mars. So maybe you don't have such an audacious goal, but for your Amazon business, what I also like about what Don put here is both there's a there's a goal, and then there's also a time frame tied with it, right? It's not just I'll double the size of my business. Is that in 3 years, 2 years, 1 year, 10 years, right? So why not take a moment, guys? Just think about it. And if you want to, feel free to share in the chat. What is the vision of your company? What is the goal? Make it quantifiable and put a time to it. And maybe you can keep yourself accountable later on, right? And make it bold, right? Think about what Elon Musk will do, and then think about what Don would do, right? I mean, he said that very interesting. He never hit any of his goals because they were just so far off. It's like when you shoot for the stars, you're going to land.
When you shoot for the moon,
high.
you're going to land among the stars.
Yeah, when you shoot for the moon, you will land among the stars. Actually, I think the stars are farther out than the moon.
I think so too.
I'm not. I'm not going to argue over this semantics.
Yeah, he was probably drinking that month.
Night, but hey, I mean, you guys get the point. It's good stuff. So, feel free to drop that in chat if you like. And Don, let's keep going. This is great.
Sure. That 10x thing, as Gary just jumped on there, everybody should take that with them. Any business that you run, you should always think, even if you don't want to grow by 10x, just sit back, turn the computer off, turn everything off, go away, and think about how you can do it. It will force you to think much differently than you think today. It's exciting. And you'll be amazed at what comes out of it. What I used to do is I used to go on a little vacation, like for 3 days. And I would tell everybody I was on a recruiting trip or I was a trip doing whatever, but I had nothing on my schedule. I didn't answer, there were no emails. So I didn't answer emails. I didn't answer phone calls. I didn't do anything. I locked myself in a room in a hotel that was in a boring place. And all I did was think about my business and how I could 10x my business. And then I'd come back with literally 30 pages of plans for every different part of my business. You can do it, but it forces you to think differently. So it's a lot of fun. Have some fun with it. All right. So yeah, so the problem with most people with their goals for growth is they can just work a little harder. So if you want to double in size in 3 years, you don't have to do a hell of a lot different. You just have to keep going. You have to maybe work a little bit harder, a little bit more each week. Maybe I'm going to come out with one new product a year. I'm not going to have to go crazy. To 10x, you have to think of everything differently. All right, so here's the way I look at growth. And this is the way I look at business in general. Go after it. In this case, go after growth like a man whose hair is on fire searching for a pond. I mean, I love that quote. I've lived this quote for my whole life. And anything I do it to the nth degree. I don't do anything halfway, anything. It's just who I am. My nieces and nephews and my wife and kids all call me, Mr. Excessive, because if I'm going to run further than anybody. It doesn't matter what it is. I'm going to do more. That's who I am. It's in my nature. So you've all seen the movie Home Alone, and Joe Pesci's hair is on fire. And what does he do? He goes running outside. There's snow on the ground. Puts his head in the snow. Do you think anything would have gotten in his way? Do you think if there was 3 police officers there saying, "Hey, what are you doing here?" You think he would have stopped to answer them? He would have ran right through them and get his head in the snow. If there was a puddle, he would have put his head in the puddle. So go after your business and go after growth like a man whose hair is on fire searching for a pond. I hope you take this one with you too, because it's great and it drives me my whole life. All right. So I'm going to give you a couple of case studies, just a couple. I'm doing this pretty quickly, but just a couple, and they're short. They're like 8 months and 9 months. We did, we work with private label, we work with wholesale, we work with retail arbitrage. So I'm just going to show you a couple here. So this one's wholesale, and okay, you can see on the left side here, when this seller started with us, their first month's profit was $2,500. And then 9 months later, their portion of the profit was over $13,000. All right, that's a 500% increase. Tremendous. That's in 9 months. And if you have the right capital and you have the right desire and you're going to work hard, that's what you could do. You see, we could have cut it off a month early, right? And shown a much even better profit than that. This seller's doing so much better even than this. All right. Here's a private label. So that was wholesale. This is private label. And again, I know this guy. He started, this is just 8 months. His first month's profit, you could see, was almost nothing, $100. And then he went down a little bit. Then he went up a little bit. Then he went down and broke even. So you see Akumi's profit. By the way, he broke even. Akumi earned nothing. No fees, no interest, no nothing. And then he didn't have enough inventory, and he ran out of inventory, and you could see he lost money. Again, Akumi earned nothing. But now he had the money to go after that inventory. He got the inventory in just in the nick of time, and you can see how he took off from there. So he went from $100 in profit to over $5,000 a month profit in 8 months. We helped him realign his business. We've helped many businesses realign their business when they, have certain issues in the business and they're not really sure. We love getting on the phone and helping them grow. So his growth rate is, astronomical. What I will tell you about this guy is that since then, his business has boomed. If I remember correctly, a couple months ago, his profit was over $44,000 in a month, and he's regularly up around 40,000. So to start at 100,000 and to do $100 and to go up into the 40s in a year and a half, year and 3/4 is fantastic. So here's another seller of ours. This is just revenue; those were profit. This guy, very interesting. He told me his story. He started his first year in business with $142,000 in revenue. The next year, he earned $144,000 in revenue. Then he came to Akumi because he couldn't get, he just couldn't grow. So he came to Akumi and he took off, and it was over $400,000 in revenue. Then just over 600,000. And this year, he's projected to be over $1 million. So it's just amazing, really. Fantastic, and it's life-changing. There's nothing better than that to see. So let me tell you a little bit about myself. So that kind of growth, those three quick, scenarios, I could do an entire presentation, and I've done it on dozens of those. But those are just three quick ones. We've got better ones too, and bigger ones, and all that kind of stuff. But these are, I want to go short term. So who am I? I've built businesses in the mortgage industry, some of the largest. Finance. I've had my own financial planning company, real estate company. Publishing. I started a publishing company from scratch and sold it. Started an entertainment company from scratch. Did you'll see down a couple bullets there, 8 feature-length films with the biggest name stars like Tom Cruise and Natalie Portman and Mark Ruffalo. We also created and produced the Broadway show Rock of Ages. It ended up as the 26th longest running show on Broadway of all time. Not bad. That was a lot of fun. I've financed, it says 100 billion. I have to change that because it's really hundreds of billions over the years, hundreds of billions, not small. I took some time off. I bought and sold 300 houses to flip in 18 months. Okay, so you think about that. That's kind of a crazy number. Every one of them was profitable. Some of them small profit, but some of them very large profit. But I bought and sold 300 over 18 months. I built and sold multiple companies, many more than I'm talking about here. And I took time off 3 times in my career. Each time I went back, started the publishing company while I was, taking time off. This last time I took time off. That's all I called it, taking a break. I will tell you, I was making millions and I walked away from it just because it's not what I wanted to do. And I took some time off. After 5 years, I believed my wife when she told me I was retired. I never believed I was retired, but I finally got to the point where I was improving my golf game. We boat a lot, So we're out on the water all summer long. We live on the boat a lot. We travel all over the place with it. We travel all over the world with my wife and I, with friends, with our kids, the whole bit. So we were having, a ball. What can I tell you? It was incredible. And then I learned about Amazon and Amazon sellers. I had no idea that this even existed. And a friend of mine that taught me about it, I got excited because I love helping people grow businesses. And I pictured myself helping, literally thousands and thousands of people grow businesses. I love doing that. So we looked at the lending opportunities because we came from, finance backgrounds, and we didn't like what we saw. And you're going to see a little bit of that later. So we turned it all upside down and came up with a model that's never been done before. Never been done. And it makes sense, and it reverses the risk. It takes the risk off of you and puts the risk on us. So you're going to learn a little bit more about it. We're not going to go too deep into it, but this is going to be more educational than anything else. So let's keep moving. That's me. All right. So I'll give you a personal example of real growth in the mortgage industry. I joined a company. They were doing $1.3 billion a year in mortgages. Not bad, right? Pretty good. They were losing $400,000 a month, okay, when I joined them. 3 years later, they went to 45 billion, under me, 45 billion, and earned a net profit after taxes of over $300 million. All right. That's rapid growth in just 3 years. That's rapid growth. That's crazy growth that everybody around you in the industry will talk about. And there's a lot of money that comes with it. All right. So here's a quick question for you. And it's pretty rhetorical. All right. So can you grow faster by taking money out of your business every month? You make $10,000 this month, and you take out $10,000 to buy a new car, to go boating, to go golfing, to go out to fancy dinners. Is that going to help your business? Can you grow faster that way? Or can you grow faster by leaving as much money as in your business as possible and letting your profits compound? That's a term you may never have heard of before, because most people have never heard of it before. Profits compounding on profits. So Einstein had said that compounding interest is the eighth wonder of the world. Think about that. Compounding interest is the eighth wonder of the world because it starts small. You all know, if you take a penny and you double it for 30 days, by the end of the 30 days, like 25 days into it, you have $500. It's not a lot of money, maybe a few thousand. And then literally in a few more days, you have, $8 million, some crazy number like that. It's what compounding does. So you have profits compounding on profits. If you do that over a period of time, your growth will be wild. It will just be wild. So profits compounding on profits. Einstein thought of interest. He never thought of profits compounding on profits. It's exciting. So I'm going to get into that for another second here. So there's a great book, very short book. I don't know if any of you have ever read it, but called The Richest Man in Babylon. If any of you have read it, I can't see the chat right now, but if you have read it, put it in. Gary will see it, and we'll talk about it in a little while. But
yes, if you have read this book, The Richest Man in Babylon, put yes in the chat, guys.
Have you ever read it, Gary?
I have not.
You would love this book. So it's written as in 4,000 years ago. And Babylon was, New York City when there was nothing else. Babylon was the world. So the richest man in the world, for lack of a better term. And they are interviewing him and they ask him, how did you become the richest man in Babylon? And one of the first things he said was, I earned gold, and then I had my gold earn gold. I had my gold have babies, and I had my gold's babies have babies, and so forth. So he basically was talking about profits, compounding profits. It's unbelievably successful if you think about it. And so if you really think about it, you're going to end up wanting to leave as much money in your business as you possibly can. You have to live, but leaving as much money in your business as you possibly can will help your business grow, right? We all know it. All right.
Yes.
So
we do have some people that have read the book. Adam Adam says yes a long time ago. Andres says yes, great book. Lina Ja says heard about it but didn't read it, and Reedy says heard about it. I'm in the same boat. I've heard about it.
It's a very short book,
Yeah.
and it's not like life changing, but I will tell you that it's one of those books that I read a long time ago, and then I went back and read it again years and years later, and it's one of those books that has stayed with me. And it is a business book, but it's a personal book as well. And the tips in this book, again, it's a tiny book, really really good. So if and Gary, we didn't talk about this, but I loved you chiming in there that, yeah, of course you can, do better if you leave more of your money in. If you're taking all your profits out, you're not going to be growing. So if you can grow faster by leaving money in your business, then why would you send your profits to a lender every month if you had a loan? Think about it. It makes no sense for your business. It's wrong. It's just not right. It doesn't help your business. It helps the lender. So that's what we're trying to, one of the things that we're flipping on its head. We're turning that whole thing around. And we, like everybody else, said, no, that's the way it has to be. No, it doesn't. Let's change it. All right, we're gonna get into that. So quick summary so far, real quick. You can grow faster by leaving more money in your business. Yes. Paying a lender is good for the lender. It's not good for you. Payment is the critical factor in growth capital. Growth capital equals the lowest monthly payment. No payment is best. And profits compounding on top of profits. The richest man in Babylon. When I mention the richest man in Babylon, I think it's important to mention that some people might say, well, that's greed or whatever. No, it's not. Anybody that's ever made a lot of money, well, I shouldn't say anybody, but I'll just talk about myself. I've done more for other people than, most people could ever imagine. It's a great thing when you're able to pay, just locally, just within your own family, your kids' college education, and then your nieces and nephews' college education, and then your great nieces and nephews' college education. Think about that. Think about how good that feels. And then all the charities and all the families that you could help. There's so much you could do. You have this opportunity in front of you. You have knowledge that most people don't have. You have people like Gary who are coaching and helping you along and bringing you great information. And he knows his stuff. I can tell you that flat out. You have all of this in front of you. It would be, a shame. I'll leave it at that, not to take advantage of it and grow your business to the nth level, and then do what you want with it. But I imagine most of you would want to share quite a bit. All right, so keep moving. I'm going to give you a key concept in finance. This is something, again, most people have never thought of. Monthly payments, okay? Monthly loan payments equal lost profit. Here's the calculation. Really simple. So if you multiply your payment by your monthly ROI, that equals your lost profit. So let's look at an example. Let's say you're earning 10% a month, okay? And your monthly payment on your loan, you borrowed 100,000 and your payment's 12,000, okay? So you multiply the two. So your lost profit was $1,200 for that month and every month afterwards. And if the next month you also made a $12,000 payment, now you're losing $2,400 a month. So think about it. That $12,000 could have been invested in inventory and new products, right? And it could have created profit for you. But instead of you earning profit off of that 12,000 and in month two off of the 24,000, you took that money that you could earn profit on for you and your family and sent it to a lender. Just doesn't make sense. So again, let's flip that on its head. All right. So here's a key concept number two. So by the way, I'm going to go back for a second. This is the case for any business, not just, in the Amazon world. This is across the board. This is finance. All right. The key concept number two, the cost of idle cash. Again, people don't normally think about this. You will in a minute. So, I'm sure many of you have a gym membership. I do. But what's the idea of owning a gym? The gym ownership, they go out and they sell thousands of memberships and 50 people show up a day. It's like, wow. So very few people are using their equipment, but a lot of people are paying for it. So what's the benefits of a gym membership? So if you think about it, if you don't go to the gym, are you going to lose weight? Are you going to build muscle? No, you're not going to get any benefit out of spending that money. So think about that. If you're sending money to the gym or if you're sending money to a lender, if you're not using it for growth in personally or in your business, you're losing money. So funds not invested for growth in inventory and new products creates a loss, and I'll show you. I'll just talk to you for a second about that. So think about it. Let's say you borrowed $100,000 and you left $50,000 in the bank and you used $50,000 to buy inventory and to start new products, okay, to launch new products. Okay, so you're using 50,000 of the 100 for growth. The other 50,000 is sitting in the bank. Well, because I might have expenses coming up. I might want to take a vacation. I could get hit with whatever, and I want to make sure I have some cash on the side. And let's say that $100,000 cost you 10%. So you're going to pay $10,000 in interest. So in reality, you're going to pay $10,000 for using $50,000 for growth. The other 50,000 is useless. You're not making any money on it. So you didn't pay 10%, you paid 20%, right? You're paying $10,000 of interest and you're only using $50,000 to grow. So you're paying 20%, double what you thought. So whatever you take, use. My father used to say about dinner, because I was a big eater, still am. He would say to me, take all you want, but eat all you take. And it's the same thing with finance. And we preach this to the nth degree at Accrumi. If we approve you for 100,000, doesn't matter what the number is, and you need 10,000, don't take 20, don't take 100, take 10. And well, what if I need more money? You need more money. Just say the word and the money's in your bank account in an hour. Well, what about next month if I need like another $30,000? Do I have to go through, underwriting and this and that? No, we have all the information. It's in your account in an hour. It's easy. Take only what you're going to use and then use it and grow and then come back for more and keep growing. All right, let's keep moving.
Don, sorry,
Yes.
Can I just add one more thing? The cost of idle
Sure,
cash.
Please.
I don't know if you're considering inflation. I mean, we're seeing inflation just skyrocketing at a 40-year high right now in the States. Do you want to, if you leave money in the bank, you're losing like, what is it, 7%, 9%, just sitting there, right?
Yeah, you're no matter what, if it's in the bank, you're losing money. You're absolutely right. I wasn't even thinking about inflation, but you're absolutely right. And inflation is across the board, across the world right now. And, it's not going to go anywhere for quite a while, I don't think. Just to put things in perspective, when I was in college, and I was also working in a bank, I worked full-time and I went to school full-time at night. So I worked full-time during the day. I went to school full-time at night, paid my way through college. I took out a student loan, not to pay for college, but to invest in stocks. And I used that money to buy my first house and my second house while I was in college, just to put it in perspective. Yeah. So, but when I was going to college is when inflation went through the roof. So here I am coming out of college, inflation's double digits. Unemployment is double digits in the United States, and interest rates, all right, the Fed funds rate went up to 21.5%. So think about that. My first mortgage was over 16% with 6 points. That's 6% extra I had to pay up front. Think about that. It's a completely different world. In 40 years, there's been a bond boom, if you will, where interest rates have been coming down. And now for the first time, it looks like they're going to be going up. So it's a very interesting time from a finance standpoint. But Gary's right. Any money you leave in the bank, you're not just, paying whoever you're using, borrow the money from, but you're also losing more because of inflation. Everything is costing more. So that 50,000 sitting in the bank in 6 months might be worth 48,000 or 47,000, and it just keeps going down and down and down. It's just the way it is.
Yeah. Yeah. This is kind of like, they don't teach you this in school, right? So
Yeah,
we got Professor Don coming at you with real world finance from the real estate and from the Amazon side. So great stuff, Don. Great stuff,
yeah,
Don. Let's keep going.
and for inflation, one of the best places to be if you ever spot an inflationary market is in real estate. It's the place to be right now, that's for sure. You all know. All right. So, can you grow faster if you had an extra 100,000? Seems like an obvious question, right? An obvious answer. Of course I can. But what if you had to make monthly payments of 20,000 or more per month? Could you grow? I don't think so. And you see, believe it or not, that is out there all over the place in this industry. This industry is like on fire with revenue-based financing, where you're paying a tremendous payment every month. And they're very, very quick loans. So it's great for the lender. It's great for the lender. It's not good for you. What if you had to make payments of like $11,000 a month? Could you grow? And that's like a term loan, like what Amazon is offering, which is not terrible. You could probably grow, but you'll grow more slowly. With revenue-based financing, I don't think you can grow. And what if you had no payments, which is success-based financing, which is what Accrumi has created? Could you grow? It's obvious. I don't even want to answer that one because it's too obvious. So again, I keep coming back to it. Do you want to grow like a man with his hair on fire, searching for a pond? Let's look at some of the details. All right, so revenue-based. All right, this is very, very, very common right now in our industry. You borrow 100,000. And they may have a monthly repayment based upon your revenue. In this case, I'm doing a low number, 10% of your revenue. All right. So imagine you're going to pay 10% of your gross revenue. So let's say you have 100,000 and this lender gives you 100,000. So you have 200,000. You theoretically go out and buy inventory worth roughly 600,000. You're going to sell it over 3 months. So you're going to have revenue somewhere in the ballpark of $200,000 a month. So your monthly payment is going to be $20,000. All right. Remember, that's what your profit was. Your profit was a 10% ROI. And I think I said that somewhere. Maybe I didn't. But you're thinking of a 10% ROI, which is pretty common. You have $200,000 of revenue. You'll have $20,000 of profit. You're taking 100% of your profit and sending it off to a lender. Can you grow? The answer is no. It's just not a chance. The other thing to think about with this, with any loan, but it's more so with these revenue-based loans, is when you borrow money, there's a lot that plays with your head. There's a lot of stress that goes in when you have a loan, meaning that I'm worried. I have a payment coming up of $20,000 this month. I don't want to invest all this money in inventory and new products. I want to keep some money on the side. I want to make sure I have enough money to make that payment. Otherwise, you're not going to sleep too well. So would you invest the full 100,000 that you borrow, or would you leave $20,000 on the side? Most likely you'll leave something on the side, maybe 20. So maybe you're going to invest 80,000. So remember the gym memberships? You're paying the other 20,000 and you're not getting any value out of it. It's a shame. In month number 2, remember you sent off 20 grand already. You'll probably keep 20 grand on the side for that month's payment. So maybe you're going to invest 60 grand for your business. And the better that you do, the higher your revenue is, the higher your payment is. That's the way these things work. So be very careful with these. They can be very dangerous, and they certainly will not help you grow. All right, let's look at a term loan. $100,000 at 10%, 9 months, pretty common. I've seen them as high as from Amazon at 17% and 12 months. So I'm just picking something that I think is fairly in the middle. You can grow, but it's going to be a little slower growth. All right, monthly payment on this is like $11,500. Again, you'll probably keep some money on the side, so you're not going to invest all 100,000. You'll probably invest maybe 90,000. In month 2, you'll make the first payment. And then maybe you'll have $80,000 invested because you're going to keep money on the side. It's just the way it works. So, and beware, sometimes the interest is removed first. Here's a very common trick in finance. So let's say the interest on this loan is $5,000, all right? And it's a $100,000 loan. So instead of giving you $100,000, the lender could give you $95,000, but you still owe them $100,000. Okay, so it's a very, very, very common thing in finance that improves the lender's return, but it doesn't help you at all. So in both these cases, revenue and term, what are you seeing that's similar in both cases? And I'm not going to force you to think at whatever hour day it is by you, but I will tell you that in all loan situations, the money that's going into growth every month goes down. So it's not growth capital. They all get to a point where, whether it be in 3 months, 6 months, 12 months, that you have zero left, and you have to refinance to replenish your capital to start over. All right. So maybe in the first month or two, you're doing pretty good, and then it keeps going down and down and down. It's not good. All right. So what do? We do success-based financing. Never been done before. So again, $100,000. We don't charge any interest. We don't charge any fees. And we originally we had fees in our business plan, but we didn't want anything to be hidden. We didn't want anybody to say, well, how are these guys making money? And I'll explain exactly how we make money. So no interest, no fees, and no required payments. You pay only when it's right for you. So obviously that's set up for fast growth. So again, assume the new company is $200,000. You had 100, we gave you 100. Your monthly ROI is 10%. Your first month's profit is 20 grand. Now what happens here, this is a good point. We share in the profit, okay? That's how we get paid. So if you don't do well, we don't do well. If you lose money, you owe us nothing besides the capital whenever you get to pay it back. But we don't earn anything. And we don't take any monthly payments, so you can keep growing. And any money we earn, we'll reinvest into the business if that's what you want us to do. So month one, it's 20,000. So what would you have earned? You would have earned 10% on 100,000, right? Without us. So you would have earned $10,000. So by doing it this way, you earned a full $10,000, all the money, all the profit on your 100,000, plus you earned 50% of the profit on our 100,000. So you got another 5,000. So you increased your profit by 50% and your ROI by 50% without taking on any risk. It's fascinating. And we did great. We're happy with this. In this scenario, it's great. Sometimes it's lower, sometimes it's higher, sometimes it's zero. That's what we do. So this is month one profit, 20,000. What happens to that 20,000? I'm going to assume that you're leaving it in just for now. That means in month two, you have $220,000 working for you with $22,000 of profit. And there's the split. You see the split keeps going more and more and more in your favor. In month three, you have $242,000 to work for you to earn profit. All right. And in month four, it's like 266,000. So what do you see different here? With the loans, every month, the money going into growth in your business is going down, 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 down. And with success-based, every month, the money going into growth is going up, 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 up. You get to grow faster and bigger than you ever could imagine. And let's say here at month three, you've earned so much money, you're doing great, and you say, hey, accrue me, we don't need the money anymore. We gave you 100,000, we earned 10,000, whatever it is. You pay us that, and we're out. That's it. End of story. We don't own any of your business, nothing. That's how it works. Okay, so what about payback? Term loan is repaid in that period of time, and then you have to refinance. And I'm telling you, it's stressful. Will they refinance me? Same thing with the revenue-based loan. You'll repay it in somewhere between 3 and 7 months, and then you'll go after a refinance, and hopefully they'll do it. And then with us, it's repaid whenever it's right for you. And with that, what does that mean? what does that mean? I mean, I could pay you 5 months later. You know, I don't have to make any payments. Or how about I don't make any payments for 3 years? What do you think of that? Great. That's what we think about it. We've never asked anybody for payments. So our very first client went 18 months without making a payment. In that 18 months, they pulled out $114,000 out of the business for them to live on. They grew the business. They were doing great. Then in the 19th month, they sent us 2,000. Then they sent us 3. Then they sent us 5. Then they sent us 10. And I thought they were going to pay us off. So I called them. I said, congratulations, you guys are doing great. What's the game plan? And I figured they were looking to pay us off. And they said, no, we're stopping paying you guys back right now. And we're going to start growing again in another couple of months. We're just regrouping. Like, oh, beautiful. Very often sellers have 2 or 3 or 4 months where they're slower. And if you're slow, whatever your products are, what does that mean? It means your inventory is down. It means you have more money in the bank. It makes sense for you to make a payment at that point in time. But that's up to you. Many of our leads come from the aggregators, people that are sellers that are looking to sell their business, but they haven't hit that critical mass yet. So the aggregators send them to us and say, hey, Accrumi, can you help these guys with growth capital? And maybe they'll be back to that aggregator in, a year or 18 months where they can really grow like this and then get, double, triple, quadruple what they would have gotten. And we have many companies that haven't paid in a year, 18 months, 2 years, and even over 2 years. So, and it's exciting. We just love to see them grow.
Excellent,
so again,
Don. I'm sorry to interrupt.
Yeah, sure.
Just to keep our eyes on the clock, we just have about 5 minutes left, and I wanted to make sure we have some time for Q&A as well.
Okay.
So
I'm going to finish this right now. I just actually already talked about growing into an exit, and when you exit, all we get is our initial investment plus any accrued profits. You keep everything. You keep all the upside. We have no equity in the company. So I'm just hitting you with this summary real quick. You can read it. Can you grow faster by taking money out of your business or leaving it in? Obvious. Is taking money out of your business to pay a lender good for you or good for the lender? You know the deal. Growth capital is equal to the lowest monthly payment. No payment is best. Accrumi, what we do is no interest, no fees, no payments, no personal guarantee, and no loss of equity. So it's true growth capital. And this is me. And if anybody wants to connect with me on LinkedIn, it's my full name, Donald Hennig. Accrumi.com is the name of the company. Get a funding offer. And I think on the link, Gary, that you have, we've included a $500 bonus. So anybody that gets funded through this, through 7 Seller Sales Summit, you get an extra $500 that you don't ever have to repay. We hope you'll use it for growth, but you don't have to. Okay, so that's just a gift. And I'm going to stop sharing now, Gary, and get into whatever
Thank
questions.
You. Yes, thank you so much. And I just dropped a link in the chat, guys. So if you would like to learn more about funding and be like some of the case studies that Don shared, how they were able to put all of those profits back into their business to compound that, kind of like what Einstein shared, right? Compound interest is the 8th wonder of the world to really scale your business. I highly recommend you check it out at the link below, accrumi.com/7FSS. And Don has been super generous to offer additional $500 that you don't have to pay back. This is for qualified sellers. Obviously, they're going to review your numbers, but if you do qualify, that's $500 in your pocket from Don. So
that's right.
I highly recommend.
And so just so you know,
what
we look at real quick is we only look at the inventory. We're not looking at your financial statements. We're not looking at credit reports. We're not doing any of that stuff. We just ask for access so we could see your inventory, and we built a system to determine how it's going to turn over and if it's profitable or not. And that's it. It's very simple.
Excellent. Okay, perfect. I wanted to address a couple of questions we had in the chat with our time remaining, and then I'm just going to put that down on the bottom. 1 second. Okay, so if you guys have any questions now, please feel free to drop it in the chat. We had an earlier question from Linaja who said, in these examples, did this growth happen because of capital injection, or is it a combination of capital and coaching?
Great question. I don't know how much coaching was done on these in these clients. I did a little bit. I'm thinking of one. I did a little bit. I know some of my partners did some with him, but I don't know how much coaching was involved, whether it was within us or externally. But really, the big trigger was the capital. They had a good plan. So I'm thinking of two of them. They had good products. One guy, he had good products. He was doing well, but just couldn't get off the mark the way that he wanted to. And what he needed to do was roll out some new products that were in the same line. So he was, I'm not going to say what his products are, but exactly the same line of business that he was doing, the same category. And it was just extensions on his product. And he rolled out 2 new ones, and his business went like this. Then he rolled out 4 new ones the following year, and his business went up like that. Really exciting to see, but he didn't have the money to do that. So money was really the key.
Yeah, I see. Okay. And then Linaja had a follow-up question. Will you lend money if I am not making a profit yet?
Now, first off, we don't lend money. All right. What we do is we invest in your business. We don't take any ownership of your business. We just take a percentage of profits for as long as you use us. Being profitable is critical to us because it's the only way we make money. So if you're not profitable yet, we'll take a look at your products for you. We'll be happy to run them through our engine and let you know what our thoughts are. And ask questions as you go through it. If you don't get the answers that you want, come right to me and let's figure it out. We'd love to help you. If we could help you go from 0 profit to $10,000 in profit, that's an absolute home run. We love that. But that's pretty much a critical piece for us, that you are profitable. Maybe we can help coach you a little bit, or Gary can help coach you to get you profitable.
Yes, I'm happy to help. So, and profitability, that's one of the keys to success, right? Especially right now in 2022 with the increasing costs, with the Wild West. So definitely feel free to connect with Don or myself about that. Okay.
So just stay with it for one more second. So think about you, because you brought up profit there, and it's the most important thing. And you all know Amazon doesn't show you what your profits are. We saw Managed by Stats was on here earlier. Great people, great technology. They show you what your real numbers are all the time. Fantastic. So if you don't know Managed by Stats, you should check them out. But knowing the problem with the revenue-based financing is that you could be paying a lot of money based on your revenue. So your revenue could be growing. You're paying a big number off of that, and your profits didn't grow. So you could lose money by doing that. So be careful.
Yes. Okay, great. And Linaja says, thank you. And we have another question. Don, I know we're over time. Do you have a few minutes left, or do you have to run?
Absolutely.
Okay. So we'll do some rapid fire questions. Question from Gina. Would this model work if you're trying to pay down high interest credit card debt? Say Accrue Me invest 10K, but you are paying down 25K credit card debt. And does it affect if you sell on multiple platforms like Walmart or your own site?
So we only count your business on Amazon right now. So we're only doing Amazon FBA. Okay, so we wouldn't count any of the business that's being done on Walmart or your own site. So all I could say, Gina, is to apply, and let's see if we could help you with that money. And when it comes to paying down credit cards, the best way to do it, if you have multiple ones, you probably do, is to pick the smallest one. Doesn't mean the smallest, the highest. A lot of people go for the highest interest rate and let me pay that one off because it's the worst. But pick the smallest one. You have 5,000, 5,000, 5,000, and this one has 1,000. Pay that $1,000 one off first. Now you'll have more money to apply to the next one. Then the other ones that you have, you pay the minimum amount and you pick one more card and you start applying more principal to just that one card. And you'll be amazed at how quickly you'll pay that card off. Then you're going to have more capital to target the next card and pay that one off. It's going to happen much quicker. So that's how you pay down and pay off credit cards very easily. It doesn't take long.
Okay, excellent. We had a pre-submitted question about Um, can we use this investment to pay for shipping, to pay for PPC on Amazon, or other marketing costs?
Yeah, so it covers, the answer to that is yes, because the way that we figure out profit is your revenue from Amazon, less your cost of goods sold, which includes shipping, less all of your Amazon fees, including PPC. So it all gets cut, and then that becomes your profit. At some point in time, if as you get larger and larger, that's what you would call your gross profit, because you might be writing off your car lease or something else. We don't include any of that. So it's your your revenue less your cost of goods sold, less all the Amazon fees, including PPC.
Mm-hmm. Excellent. Okay, that's great. I mean, shipping, even though the prices are coming down, that's still significant, and PPC is becoming more and more expensive nowadays. So I think,
And if you think about it,
definitely.
we're taking the risk right along with you by doing that.
Yes. Yes.
If something goes wrong, like, shipping costs double and triple and quadruple, we're taking that risk right along with you. The way that it's
Yes.
always been done is you took all the risk. 2 years ago when COVID hit, we had many clients that, private label clients in particular, that couldn't send any of their products into Amazon. Amazon wouldn't accept them, if you remember. Well, they lost money. Well, what did they owe us? Zero. So people ask me, I was just at Prosper, and I got this question so many times. If I borrow $10,000 from you, and it's not borrow, it's invest. If you guys invest $10,000 in me, and I make no money for 5 months, what do I owe you? And the answer is $10,000. We didn't earn anything. We only earn a percentage of profits. There's no fees. There's nothing else. There's nothing hidden. That's the way it
Right.
works.
Right. Okay. And we also had a question for like newer sellers. What types of capital are available to smaller, newer sellers?
It's tough, but you can go after credit cards. But I think it's one of the most dangerous things you could do, personally. If you're very young and you use credit cards to build a business, go for it, because what's your downside? You don't have a house and a lot of assets to lose. If you're very young and you don't have those assets, go out and get all the credit cards you want and take a risk and take a shot and shoot for the moon, literally. And what happens if it all collapses? You're going to file bankruptcy, and you're going to wipe out all those credit cards, and you're going to start over. You'll start small and you'll start over and you'll build again. I mean, it's not the worst thing in the world. If somebody
Yeah.
my age crashes and burns, if I filed bankruptcy, it would be painful, very painful. So, you don't want to do it at my age, but if you're young, go for it. The other thing that you could do if starting out and you need money, is talk to your family and friends and make a deal. Look at the deal that we're offering you. Okay. Just copy it and go to your family and friends and say, here's what I want. Give me $10,000 to build a business. And I'm going to give you a percentage of my profit. And we can teach you all of that. We have no problem with that. We want you to win. That's the whole idea. So we'll show it to you. We'll give you everything on it. And now bring it to your family and friends and apply it personally. And when, they'll probably love it over time. You'll love it over time. But you really don't want family and friends as your partner long term. So keep it short term and then get away. Think about whether it be Thanksgiving dinner or Passover dinner or whatever it might be. You don't want, family looking at you saying, how's my investment doing? Not fun.
Yes. Yes. Got to be
I hope
careful
that
with the
helps.
family. Yeah, with
Yeah.
friends and family. But I mean, that could be the first option. And I've done that in the past as I was starting out my business. Loan from your auntie, but make
Yep.
sure you can pay it back on time so you don't burn any bridges. We're out of time, guys. Don, thank you so much for coming
My
on. I just
pleasure.
wanted
Thank you.
to remind everyone about the opportunity that Don has for qualified sellers for this investment. I think it makes a lot of sense. I mean, and Don and Agrumi is sharing the risk, right? I mean, you only pay them back when you're growing and when you're profitable. So
Whenever
definitely
you
check it
want,
out.
when it's right for you.
Yes, whenever you want, when it's right for you. Just to be transparent, I am an affiliate of RecruitMe, so if you do sign up, I will get a small commission. It helps pay for the bills and helps keep the lights on. It helps pay for my coffee as well. I definitely need coffee to keep going because we got a lot of stuff running for this. So Don, thank you again for coming on and
It's my
sharing
pleasure.
this knowledge, and I hope this is useful, everyone. And we will see you guys at the next session. And as Don mentioned, we have Managed by Stats in the guest audience today. They will be joining us for a training later in April. It will be related to profitability, knowing your numbers. So I think this could go hand in
Perfect.
hand with some of the stuff that we're talking about. All right. So have a great day, guys. And we will see you guys at the next session. Bye, everyone.
Yeah. Really nice meeting you all.